We are live. Hello, hi everybody. Happy Friday. It's another beautiful day. Just before you take off for your little weekend, then here comes our JadeStone Friday live broadcast. So today our topic is about real estate and the taxes. We know that tax is a complicated matter. Myself, as experienced in real estate, I don't know that much. And so today our expert speaker is Katie Hu. Katie is the tax director from KCH, tax accounting advisory firm located in Manhattan, in Times Square. So I will give to Katie to introduce herself.
Hi everyone, happy Friday. Today I'm gonna have a little bit chat with Anne, my best friend. She's a very good real estate broker in Manhattan. We will talk about a little bit on the tax side in your real estate purchase or selling. So my name is Katie. I'm a tax director in KCH. KCH is a financial consulting and accounting firm located in Manhattan Midtown. I spent most of my career in U.S. tax-related consulting work. I used to work for PwC for 7 years. So I would love to give you a little bit suggestion on the tax perspective on your purchase.
So the reason that I have Katie, tax director, as our second guest speaker in terms of our entire series is that usually when the buyer start a home purchase or investment purchase, the very initial stage, the very initial step is that we verify whether the buyer is purchased as all cash or financing. So last week, 2 weeks ago, we have a Tony talk about financing, and then when we talk about, depends on the buyer's intentional use of the property, he or she purchased, then we need to have a tax, expert to help analyze what ways would be the ideal to put your deed under. So that is where the Katie comes in, and we have worked on several cases together. And so international buyers, a local buyer, have come to Katie for her advice. And so here, because tax is really complicated matter, and we can't really dig too deep. But you heard some basic questions. So the first question that can you tell us what are the tax benefits for home ownership? Let's focus on the primary home.
Sure. So a lot of young people, when they begin to work, they always have the question, should I buy or should I rent a property? Here I suggest if you have ability to purchase, you can buy from the tax perspective. There is a lot of deductions you can use. For example, the property tax you pay and also the mortgage interest are all deductible on your individual return.
So mortgage interest and property tax.
Yeah.
What about the interest pay on point?
Yeah, the point is also a part of the interest you can deduct it.
Okay, so that sounds really good. And so for the capital gain tax, right? What is the capital gain tax rate?
Okay, so when you sell your primary residence, and maybe it's not the first home, and you're gonna calculate the capital gain and capital gain tax. So it depends the holding period of your property. If it's less than a year, it's treated as short-term capital gain. It's like ordinary income.
So will be based on your income tax bracket. Okay.
Which is the 10% through 39.6% this year. It may change. So we will look at the new tax bracket when it's released by IRS. If it's the holding period is more than a year, it's long-term capital gain. The long-term capital gain, it also depends on your income. from 0 to 15% to 20%.
So 0%, 15%, 20% considered as a long-term capital gain tax based on your income tax bracket.
Exactly.
Okay, so can you explain a little bit for a homeowner, the capital gain tax exclusion amount? That we know that $250,000 for individual and $500,000 for married couple.
Yeah.
What are the criteria for you to benefit from this?
Sure. If it's your primary resident and you live in 2 years in the past 5 years.
2 out of the last 5 years.
Yeah.
Do these 2 years have to be back to back or just like all together?
All together
as
2 years.
2
You
years.
will be qualified this exclusion, which
Right.
is 500K for
Right.
a married couple and 250K for a single.
For the married couple, right? This also applies to the same sex married couple as well.
Yeah.
Correct?
Yeah. If
Okay.
you are legal.
She just cracked me up. Sorry. So for the seller right now that sorry, it's too funny. I can't stop laughing. I'm sorry. So for the seller,
I know it's a very sensitive topic. We not try to touch on this kind of topic after the election. Very sensitive. Let's continue. So I will say, okay, I will become the host today. And cannot stop laughing. So next question is, for the sellers, what costs associated with the sales can be included in the capital gain calculation. So if you are not applied for the capital gain exclusion, capital gain, when you sell your home, you will calculate the capital gain tax on the Schedule D of your individual return.
So when the seller sell the house or sell the property, we're not talking about the investment property yet. We're just talking about the primary home. The closing cost could be considered as the base of the cost, correct?
Yes, exactly.
So that means that the fee to the attorney, to the bank, to broker commission, transfer tax,
it's all
included.
It's all excluded from your proceed. So when we calculate the capital gain, we will put everything we received minus what we paid for the closing cost. And then minus the basis for our property. That's how we calculate the capital gain.
Okay, so we're going to. So what about if the seller sell and lost? If it's like, let's say I lost $50,000.
Sure.
Is that also can be tax deductible?
If it is your, again, primary resident,
Right.
it's not deductible because you are eligible for the capital gain exclusion. You also not, the loss is not
I see.
applied.
Okay.
So, but if not the case, the capital loss will be deductible
Okay.
on your return.
So we're going to move to the investment property a little bit. Let's talk about when buying a rental property and it's individual. So what are the items that are tax deductible for investment property, rental properties?
Yeah. So rental property, everything to maintain the rental property in a regular condition is deductible. That's including, the management fee and also the cleaning cost and also some of the improvement. Well, that depends because a lot of improvements you will put into your cost and depreciate. So depreciation is also deductible on the rental property as well.
Okay. So basically what you're saying is that whatever that whatever investment cost you put in to maintain your rental property, including the material, including the labor cost, or including what you pay to your property management, those are considered as the base for the tax deduction.
For the cost basis to depreciation,
right.
because for example, you put a window,
right.
a new window to exchange the window. That is a part of the building, so it's treated as the cost basis of the property, and you can deduct the depreciation on the basis.
Okay, so and I guess another very important question right from the beginning, that if you are considering purchase a rental property, you want to think about, should you purchase under your name or to form a limited liability corporation, and so what's your take on that? What's the benefits?
I encourage them to form an LLC and hold the property. One, it's better to shield the risk for the dispute between landlord and tenant, and it will be the LLC, not the individual, responsible for the dispute, and you are not personally liable for the liability. The other thing is will be very clean cut. All the maintenance cost is related to the rental property under a corporation. Either a corporation or LLC is under an entity. So it will be very clear cut that this company is running this rental property. It's more like clear cut in front of the tax authority.
Okay, so this reminds me of the record keeping, right? So before we keep everything in the receipt, right? And for someone like me, it's not impossible task for me to keep, so organize just my weakness. I'm sorry. So can the credit card receipt, credit card record, electronic, anything record be considered as?
Yes.
Okay.
Exactly, and it's better to keep all the receipts for all the cost you spent. You can use right now. Nowadays, a lot of applications can take a picture, and they will calculate. You can download as an Excel sheet. It's very convenient using those. Take advantage of application to keep track on the cost spent on the rental property.
So, do you have some recommendation on some good application?
Sure. It's specified is a very good.
It's specified.
Yeah, application for the client. I always recommend them to download it.
Okay.
And photos of the receipts is acceptable for the tax authority as well.
Okay. So, there's just so many layers of taxes, complications. I'm not going to dig into it because I started to get lost. So we talk about the parents buying with an adult children. We know that real estate price in New York City is really high. At average, people in New York City spend about 60% of the income on the housing, and that's it just really ridiculous amount of income goes to housing, and it's so tough task for us to save up enough money for down payment. So it's very common for parents to give money as a down payment. And so can you tell us about what are the rules for the parents to give money? Because we know that there's only like $14,000 a year per adult per year. Right.
Okay, so it's a kind of a gift tax related question. So that depends on the status, immigration status of the beneficiary and the people who give the gift. If I encourage before you make this gift, consult the trusted state attorney on the gift tax impact. Usually, especially as an international gift, it will be challenged by the tax authority of U.S.
What about just
this
local
transaction.
parents?
If it's a local parent, you know, the U.S. resident is qualified for $5 million for a lifetime gift. So that's also a question, but it will not withhold when you give them the money. So it will be a lifetime. So I don't think there is a lot of, you know, the tax implication for the U.S. resident.
So okay. So basically, you're talking about that if you are, let's talk about just the U.S. residents here. The parents can have up to $5 million.
Yeah.
Lifetime gift money.
Right.
Oh, okay, that's great.
And this number is changing every year. So we need to like look up the most recent rules for like the total amount of lifetime gift.
If you are just as lost as I am, slightly, here comes to why it's so important to sit down with your tax accountant right in the beginning when you want to purchase the home for your children or for investment property. It's
Yes.
really important.
Mm-hmm. Especially the international transaction related.
Totally. And so, what about the parents buying for a kid that's younger than 18-year-old minor? What would be the ideal form to purchase?
Okay. If the parent is overseas.
Right here, let's talk about local.
Local. Okay.
Yeah.
So if it's still a gift tax issue, or like after the parent's deceased, it's a state tax issue.
But when they purchase, right, the kid, let's say the kid's only 10-year-old. That's the intention for the kid to grow up to use.
Sure.
What would be the way to set up an ideal form to?
You can consider a trust to hold this property as well. To put the children or child as a beneficiary of the trust, I think it will be solve the problem. Especially you use the irrevocable trust, it will nothing related to your asset anymore. So it will have the benefit of the tax benefit and also have to exclude the gift tax as well, and also it's the asset protection.
Okay, so basically you're saying that it's ideal to set up a trust or irrevocable trust. What is the difference?
For the irrevocable trust, it will be not treated as your asset anymore. It's separate. The trust will calculate the tax benefit on any real estate investment or like any investment, like you buy a stock, you can put in an irrevocable trust, and it will be separated from your asset.
Okay, so I guess my last question, I can't really be more specific, but the last question she's mentioned about the gift tax and the estate tax. So what are the rules and what is the maximum amount for gift tax and estate tax?
If it's just the U.S. local,
yes.
The state tax is very, the rate is very high for New York City, including the federal plus the state tax. So I encourage everyone to planning on the state tax to take advantage of tax planning, and also the insurance or trust to do the tax planning on the state tax. For the gift tax, as I mentioned, it's around $5 million for a lifetime gift tax exclusion. And the gift tax is paid by the giver, it's not the beneficiary. So before doing the gift, consult your accountant as well and the tax professional.
So I know that a lot of clients who are entering their senior years, and they start to make arrangement about their assets, because you always want to think ahead, and it's very important. So how do you, if I send a client to you, right, and for consultation, just for everybody to know that, how do you, what kind of like charges, or by hour, or how does it work?
I charge by hour, not really, because the clients are usually not like the time-based charging.
Free consultation?
Right, consultation will be free.
Consultation will be free. Especially if you say you're an entrance client.
Yeah, thank you.
So you got so many benefits to associate with entrance.
Exactly. So I will first make an analysis of your goal and either it's your senior years or you have a long-term plan. So I will get more information and based on your situation to have a planning strategy on the asset.
Right. So I know that it's really, really important, my point of view, because sometimes as a real, as a broker, it's really my job, start from beginning, to understand what client they intentionally use. And I should be knowledgeable and experienced to advise them to say, I think you should sit down with your CPA or tax attorney or accountant to plan ahead. And because for you to set up LLC, even though it might incur some additional cost, besides when compared with purchase under individual name, if you're let's talk about rental property, but I think it's really it's worth the money, additional cost, and this is especially important for foreign buyer. The foreign buyer, you come here, you purchase investment property, how to set it up, and parents, purchase for children. This is considered scenario that we encounter. So I know it's very, very tough for tax or accountants to sit here to answer detail, because those tax rules apply so intimately to individual circumstance. So if you have any additional question, don't let this episode stop you right here. Just contact Katie or contact your CPA for consultation. But my question is quite simple, but maybe you can share with us that normally what other tax question related to real estate that people come to you and what their concerns are.
I will not only doing like a tax analysis for this situation. My firm is also doing a lot of projects, either like a commercial real estate or a personal individual investment. I will analysis the income in 5 years for a forecast, and you will be like see your return very clearly if you like deciding into, and I will show you like the return every year. So we do that kind of analysis as well, and also we doing like for the tax planning, especially for individuals and also companies as well. Right.
I don't know how clear, how many minutes we are. 25 minutes. We have. I'm surprised I go through 25 minutes on the tax question. It's a very, very complicated question. I don't think that anybody should just skip it. That's why I never do my own taxes. Every year I go to tax in my CPA. I don't rely on TurboTax.
Yeah.
So I think that we are time is almost up, and if there's no other question, then we're going to end our session today, and we're going to post Katie's information on the our Facebook web page. And please, the reason that we are doing this session on my personal Facebook right now is because I have 2,000 Facebook friends. But JadeStone Real Estate, we have a official Facebook page for JadeStone Real Estate Consulting. It's new, but we're really making an effort to make it beneficial, informative for everybody who visit the site. So please take a moment to, if you're watching us or now or later, or if you are looking at my Facebook, please take a click my JadeStone Real Estate Consulting official page, and so gradually we hope that we can transfer this live broadcasting to company website. And so the next session, very naturally, we talk about lending, we talk about tax planning, and then we were ready to go shopping and put an offer. Who comes next? That will be the attorney. So stay tuned, and I will announce who will be our guest speaker, the expert next time for our attorney. And have a wonderful weekend. Bye bye.
Bye. It's a pleasure. Make sure you like the video. Thank you. Bye.
Bye.